Hi everyone, I'm Ken from Crypto Trading KS, an inventor of the CTKS method. If you want the signal inside the markets, you've come to the right place. That's what we talk about each and every day. There's definite reasons that Bitcoin and crypto sold down, but things aren't as bad as a lot of people think they're going to be. And when we look at Bitcoin's gravity, we can see Tron shining in the darkness, and the memes such as Floki, Whiff, and Bonk are all getting currently bonked on the head. A lot of people are panicking inside the crypto market right at the current time, and that's to be understood because crypto is coming down. But is it bad, or is it the sign of a turnaround? I believe everything is set to rally, and I'll explain that proposition in this video. This is a really special video. We're going to look through the main markets to give us an understanding of what's happening inside the crypto market. A lot of people inside crypto don't do this, and that's to their absolute detriment. Our global family knows the Tier 1 charts are all important. For example, what's happening with total crypto market cap, the S&P 500, the NASDAQ. And these particular charts tend to get reflected in the Tier 2 and Tier 3 charts. We're going to have a look at those as well. You'll find this video incredibly helpful, and if you would like any of the structural levels, they're available as indicators from CTKSMethod.org. Let's run the numbers. In the past 24 hours, we've seen the crypto market come down somewhat. I'll go through exactly why this happened from a structural perspective. We can see Bitcoin down a little over 2%, Ethereum just a little over 1%, and Solana has been hit hard, over 3% down. But I'll explain in this video, this is not the time to go running for the hills. There are always opportunities inside every market, and the crypto market is the best market in the world for opportunities. The greatest gainers in the past 24 hours, Beam, Casper, Aave, MOG, NOT, EOS, LDO, ICP, and Conflux. The greatest losers in the past 24 hours, AI, OZ, Popcat, Boom, Room, Mantle, Eastcash, Teo, BSV, and Phantom. It's pretty interesting that NVDA had an absolute bumper day, but Bittenser is down. We could see the AI cryptos start to turn around, but a lot of people are really afraid in the crypto market right now. If you're new, a very warm welcome and welcome back, CTKS family. We know that there's only one market in truth. That's the buy on red, sell on green market, or the Borsog market. If you're new to our global community, please smash that like button and don't forget to subscribe and turn on notifications. We have the best community on YouTube. Currently, looking across the crypto market, the major cryptos are down, and this creates a kind of a situation where people look and say, oh no, my crypto came down, sell, 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 and as soon as it goes green, buy, buy, buy. That's not the way to trade or invest in crypto, and that's not the way to trade and invest in anything. We've seen the crypto market literally fall off a bit of a cliff just recently and bottom out, but this can all be explained from a structural perspective. And if you don't know the structure of what you're looking at, you're in a huge degree of pain. Let's just pop on the indicator. This particular chart is looking at all of crypto. That is what it's meant by total crypto market cap. We can see that we came up through this structural resistance level and through these structural resistance levels, but we couldn't go up to the next one. Also, we can see that we lost this key structural support level at $2.328 trillion. When we lost this, we had a negative fresh air gap. And what did that mean? It meant that we would find support in lower structural support levels. And that's exactly what we've done. Anybody who knew structure saw as soon as we were losing this lower support band, we were moving down to this area. This means that this price action is completely predictable. The vast majority of people inside the crypto market and unfortunately inside the stock market don't have any clue on what they're doing. They just simply put money on something and hope and pray like hell that the value will go up. Here we can see that just decay of Bitcoin's price action. And we know why it happened, because the entire crypto market lost structural support. If you thought that structural support didn't mean anything, hopefully this price action is telling you something. You must keep your eye on structural support because it impacts every single crypto in the market. When Bitcoin comes down, we expect every single alt to come down with it. So you can see Bitcoin just retracing here. What about Ethereum? You can see that blue line. That's Bitcoin. That was retracing as well. What about Binance Coin? Retrace. Solana? Retrace. XRP? Retraced. But you can see it's really quite strong. What about Doge? It really retraced. Ethereum Classic and Bitcoin Cash also retracing. And we can also see ADA retracing as well. No alt can escape Bitcoin's gravity, but the Bitcoin cannot escape total crypto market's gravity either. If you would like to learn how to draw up structure on your charts, you'll need 2 levels of standard certification. If you want all the hard work done for you, you just join the service. And some great news, a newsletter is coming soon. This will have analysis across crypto and the stock market, and it's going to be completely free, so please join up. It's not out yet, but it's coming. And if you'd like to see what you can do with structure, there's a couple of shared trades on YouTube that are available to watch from CTKSMethod.org, so you can see you can make a huge amount of money if you know structure. The crypto market feels the fear inside the main markets. And the VIX has been going nuts recently. It looks like the VIX is starting to cut under. We would expect to make a series of lower highs here, and this will propel crypto and the stock market forwards. NVDA had an absolute bumper session inside the stock market, and when we look at NVDA, it was doing this. How could we have predicted that NVDA could bounce so substantially? The answer is structure. Let's put on the indicator. What we can see by putting on the indicator, and this is just marking up your chart with level 1 and level 2 standard certification, NVIDIA was coming down into more and more safety nets on price, and there was a huge degree of buying interest in this structural support level around $101. When you come down through a fresh air gap, things can get really turbulent. You'll require more and more structural safety nets to capture price and rebound it. And we can see that the buyers really stepped in and pushed the price higher. But where did they push the price higher to? You got it, the structural resistance of 118. This chart is on a daily basis. Tesla's price action over the last week, this is a daily candle pattern, can be explained by structure as well. Let's pop on the indicator. What we can see here is that 220 level held Tesla's price structure, and you can see there's a couple of lighter structural support levels below. Then we had a modest fresh air gap and all of this structure playing up to the 234. That's put a ceiling on Tesla's price so far. The volatility inside every market can be explained by structural levels. And I pointed out quite a few days ago that in the S&P 500, these were the levels that we needed to keep our eye on. There was a lot of structural one support, but it turned into structural resistance from 55.40 down to 54.80. And we've just pummeled up through that structural resistance level. This points to a bit of a turnaround. So when we look at this, we're starting to see a change in direction, a change in trend. But how could we explain what happened in here? I'll zoom in and show you. And this chart is on a daily basis. All investors and traders make their money through volatility. Volatility is greatest in positive and negative fresh air gaps. This was a negative fresh air gap on the S&P 500 or the SPX, and we can see the price got absolutely crazy volatile during this period. But there's a lot of cross dependencies and factors that cause price to move from one structural level to another structural level. If you've been looking at your cheat sheet, the markets look fantastic at the current time. Not something to run away from, something to run into. But unfortunately, the vast majority of people read and watch the news. The news is sensationalistic. As soon as price comes down, everything is a 1929 crash. And as soon as price goes up, it's going to the moon. You don't want to be part of that. It'll drive you crazy. Just look at structure. An important thing to look at are junk bonds. Junk bonds, or JNK, give you an idea of risk on or risk off sentiment. We've had a clear departure for risk on sentiment, but we need to look at the structure. So let's pop on the indicator. By looking at the underpinning structure, what we can see is that we've got structural resistance just above where junk bonds are now, but it's a clear cut. This particular level held junk bonds really well. And you might say, Ken, I don't care about junk bonds. I don't even know what they are. Junk bonds are a really important thing to look at, and here we're looking at them on a daily basis. You remember how the S&P 500 just jumped up. NVDA jumped up. Everything jumped up. That is the power of junk bonds. But Ken, not everything jumped up. What about crypto? It jumped down. Absolutely, these things happen because total crypto market cap lost its structure. It is all explainable. But not by the news. You want to look at charts marked up with structural resistance and structural support. You can get your news from the charts because that's where the truth is. Another thing to keep your eye on are the futures, the S&P 500, the NASDAQ, the Dow, and the Russell. Look what the Russell did. Russell was so naughty. It just came up and then decided to tank. What about the Dow? Did a similar thing. What are we noticing now? Things are starting to turn around. This is not by accident. Total crypto market cap came into structure. Everything is intercorrelated and interconnected. If you want to become a professional investor and trader, and you need to do both, don't just be an investor. Investors can only make money when the markets go up. When the markets retrace, investors get slaughtered. However, if you're an investor with a trading mindset, whoa, baby, you are skillful. You're going to look more deeply across everything. You'll be your own source of news because you'll be looking at structural levels inside the market. So let's look at the Russell 2000 structure because that's really important, isn't it? Because it's giving us some idea as to where Bitcoin could go. Looking at the Russell 2000, on a daily basis, which is the RTY, we can see that Bitcoin has been following the direction of the Russell 2000. Look at this. This is pretty damn interesting. We need to look at the structure to determine, is there so much structural overhead resistance here that the Russell simply can't get through it? Or is the structure below so that we're just like NVIDIA coming down into an area of really good structure and we could ping up really fast? We'll only know if we mark the chart up with level 1 and level 2 standard certification. Or we can shortcut by popping on the indicator. Let's pop on the indicator. Okay, what are we seeing here? Ooh, that looks really good. We can see that we've got structural underpinning support and we're seeking to get through this lighter level of structure. That looks like a fantastic chart to me. But another thing we want to keep in mind, all of these major indices typically move together, the Dow, the Russell, the S&P 500, and the NASDAQ. We haven't covered off the NASDAQ. Let's have a look. Looking at the NASDAQ from a structural perspective, we can see that changes in trend are starting to occur, and we're starting to leave behind an area of overhead structural resistance and start to get into a potential fresh air gap. The NASDAQ could rally significantly, and if it does, it's going to pull everything up with it, including crypto. But Ken, why did crypto come down? Well, typically, when the big end of town wants to shake retail out, it just reduces the price, and every single person goes running, except for the professionals. The professionals say, ooh, juicy. I wanted to give you a different perspective on the crypto market so you could see, yes, we're in structural support right across total crypto market cap, and look at how it caught it. A lot of people would just say it's selling down to zero, it's going through the floor. No, it's going to structure, and this is the way that it always occurs. When institutions want to get rid of retail, they just make the price go red, and it doesn't need to go red for long for people to absolutely and utterly flee from the crypto market. But as professionals, we know what the institutions are doing. They're trying to create a better percentage for themselves. Therefore, we need to look more at the main market, and we can see the main market looks pretty damn healthy. You saw how NVDA came down to structural support and bounced like a Super Bowl. Junk bonds is a really important chart. It's a Tier 1 chart. Tier 1 charts give us the health of the engine of financial markets globally. Total crypto market cap is also really important. We've looked at the S&P 500. We've looked at NASDAQ, Tesla, NVIDIA. All of these particular price movements from an up and down perspective can be explained by structure. Structure is the most vital thing you'll ever look at in any financial market. And you can see that we've moved from stocks to into crypto to yields to all over the place inside the Tier 1, Tier 2 and Tier 3 charts. Also, the Forex pairs are very important. And please note, the structural boundaries on the US 10, the US 2, and the USD JPY or dollar yen have all been updated and released. All of these structural levels are available from CTKSMethod.org, and we also went through the Russell. To transform fear into confidence, you need to understand the structure that exists behind the charts. And if you don't, it's just a terrifying journey. Instead of doing the structural levels of the charts, you'll just turn to the news and think that the news can explain what happened inside the structure of the chart. Just look at the structure. Always remember, price is the ultimate reality. People may have stories and the news may have stories, but the actual price is the only reality. And always remember that all charts are intercorrelated and interdependent. When you look broadly across the Tier 1, Tier 2 and Tier 3 charts, you don't follow the herd. You follow analysis. You follow knowledge. This is absolutely the way to go. We have such an amazing global family, and if you're new, please smash that like button if you're enjoying the content, and don't forget to subscribe. Today, I thought we could talk about price reality as the only reality. The news wants to just give you stories, give you hype, and give you noise. But if you look at the structure of the charts, you get the actual reality. After all, that's what you pay, and that's what you get if you sell. I'm really looking forward to your thoughts on price reality. It's a really good thing to discuss, and yesterday's comments were just awesome. Well done to everybody who answered the question. If you turned a 1% profit and you did it 10 times, how much would you have? It's pretty simple. You would have 10%. That's it. Now, let's just ask another question. If you could do that for a week, what return would you have in dollar terms? And what return would you have in percentage terms, just using that same money? That's the idea with just rolling it over. And what about 30 days and what about 365 days? Remember, I'm not asking any trick questions here. Please let me know in the comments, what do you think these values are from a dollar stance and a percentage stance? And do you think it's possible to get a 1% return in 24 hours? If you don't have the structural levels, just pop across to ctksmethod.org and you can pick them up there. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.